Steve here. The Morning Ledger is officially open. You're tuning in to our latest explainer, and today we are cutting straight through the noise. The mainstream headlines right now, they're screaming peace and euphoria. But if you actually strip away the narrative and look at the Wednesday close, it was an absolute scorched earth short squeeze. If you're buying into this euphoria without checking the fine print, you are literally flying blind. We're heading into a session where the amateurs are trading hope, while the smart money, they're moving to the sidelines. Let's look at the actual data.
Here is your morning tactical intelligence briefing. Today we're breaking down the Wednesday closing tape, Berkshire's massive cash fortress, the geopolitical ultimatum on the table, the bull versus bear debate, and we'll wrap up with your strict professional trading directives. Ignore the noise, respect the ledger. Let's move.
All right, Section 1, the Wednesday closing tape, a scorched earth squeeze.
So, the bulls staged a massive ambush yesterday. We saw global markets practically erupt on a single page of text. But do not let all that green intoxicate you. The S&P 500 closed at 7,365, punching right through into record highs. But look at energy. Brent crude plummeted nearly 6%, down to $103.54. That is a massive drop-off from that $115 level we saw just earlier this week. Meanwhile, gold caught a 3.5% rebound squeeze, and Bitcoin is just breaking records, finding clear air well above the 81,000 mark. Make no mistake, this is a hope rally. It is not a fact rally.
And here is where things get dangerously stretched. The S&P 500 pushed all the way up to 7,395 intraday. The algorithms just kicked into absolute overdrive, blindly chasing that ceasefire headline right into nosebleed territory. When the algos take the wheel on pure headline momentum, the technicals warp. Keep these levels in mind because gravity always wins eventually.
Moving on to Section 2, Berkshire's massive cash fortress, the smartest money. $397 billion. That is the sheer physical weight of the record cash pile Greg Abel and Berkshire Hathaway are sitting on right now. Just let that sink in for a second. The Oracle is hoarding nearly $400 billion in dry powder. They aren't buying into this tech-heavy squeeze. They are sitting there, waiting for a real snap.
In fact, Berkshire sold $8.1 billion in stocks this quarter. They are actively dumping stock into this exact euphoria. So the absolute crucial point for you is this. If the smartest money in the room is hoarding cash while the index sits at all-time highs, you have absolutely no business being fully leveraged right now. Especially, and I mean especially, not before we see Thursday's initial jobless claims and the productivity numbers. If the economy shows cracks before any actual ink hits paper on a peace deal, this rally is going to face a harsh reality check.
Which brings us to Section 3, the geopolitical ultimatum, the one-page memorandum. Let's strip away the spin and just read the raw text of the situation. President Trump issued a final ultimatum for Iran to accept a one-page memorandum of understanding, the objective reality. He stated flat out that if they don't agree, quote, the bombing starts at a much higher intensity. If they sign, Project Freedom and the bombing campaign they're calling Epic Fury, they come to an end. If they don't sign, the strikes resume, and they resume before the hard deadline of a scheduled trip to China next week.
What this creates for us on the desk is a perfectly binary trade. Total straight reopening versus total grid blackout. The threat to the Iranian domestic power grid is acting as the central poker chip on the table right now. Maritime insurance firms are completely paralyzed. They are sitting on their hands until ink hits paper. We might be in a suspension of strikes right now, but make no mistake about it, the ships are not moving yet.
All right, Section 4, the bull versus bear debate, peace versus the ultimatum. We've got two massive opposing forces battling for control of the sentiment right now. On one side, you have the bullish view, the peace dividend. These traders are betting that this one-page deal is a masterstroke that totally breaks the blockade by tomorrow morning. If that happens, the strait reopens, oil drops to $85, and the S&P heads straight for 7,500. But on the flip side, you have the bearish view, the ultimatum trap. They are betting Iran balks at the demand, and if they don't sign by the deadline, Epic Fury resumes at a much higher level. If that trap springs, well, $103 oil was an absolute gift. We'd be looking at $150 Brent crude and a brutal test of the blue 50 EMA on the S&P.
Finally, Section 5, professional trading directives. Let's get to the tactical orders.
Listen to me. Trust the levels, not the tweets. First up, I want you to watch the Aqua 20 Simple Moving Average. The S&P is significantly overextended above it right now. We are deep in nosebleed territory. If futures open a gap down below 7,340, this relief rally is dead.
Second, monitor the 103 Brent crude floor. That is absolutely critical support. And third, respect the daily RSI gauge. Right now, it is screaming, do not go chasing the 7,365 level with new money. Wait for that cooling off period back toward the 50 line.
The physical action on Brent crude is telling a vital story right now. We are testing that critical $103 support floor amidst all this geopolitical volatility. And I want you to remember this. If oil bounces from here, it means the professionals do not believe this peace deal is actually going to be signed. Watch this level like a hawk.
So, I'm going to leave you with a question to chew on today. Are you trading the headlines, or are you respecting the ledger? Because the ledger doesn't wait for latecomers. As you head into the morning bell, I want to see small sizes, I want to see tight stops, and above all else, I want supreme discipline out there. Let the amateurs gamble on the news. We trade the data. Watch your averages. This is Steve. The ledger is open, but I'll see you at the bell.